So the stock's down. It's down 2%. It rallied a lot more than that yesterday. Was this bad overall, or pretty much in line with Microsoft's continuing momentum?
Sure. The core parts of the Microsoft story that the long-term investors are really interested in is the commercial part of the business. And commercial momentum was actually really good in the quarter. You saw commercial cloud bookings accelerate to 22% growth. That's the main leading indicator that we look to. But some of that upside was taken away by the more transactional elements. In particular, Windows OEM came in below expectations. That's high margin business, and it took away some of the revenue upside and some of the EPS upside. So for the long-term guys who are looking at this story as a real good secular story in front of public cloud, in front of hybrid cloud, you're still really on board with the story. You're not too discouraged by last night's print. Actually, you're encouraged by last night's print. It's only the more near-term focused guys who are looking for earnings outperformance. They were the ones who were disappointed last night.
So 74-75% in the commercial cloud category, kind of equal with what we saw last quarter. That's good.
Right. Yeah, so you're talking about the Azure business. Their public cloud business actually sustained 76% growth. That was dead solid with what we saw in Q1.
Okay.
That's one of the core secular components of the business. A lot of guys coming into the print were worried about the ability to sustain that growth. You saw a lot of the component suppliers talk about weaker shipments into the public cloud vendors like Microsoft with Azure or Amazon with AWS, but you didn't see those fears be realized. You saw no diminution in growth, and the management team sounded really comfortable in terms of the durability of that demand trend on a going forward basis.
So how are you modeling in the jitters on cloud overall that we've seen, at least so far as the quarter's been going on?
Sure. So we're pretty confident in the cloud demand trends. We look at demand indicators like our CIO surveys, conversations we have with partners like systems integrators, and they're all really confident in the continued growth in public cloud. We see more and more new workloads being built in platforms like Azure and AWS, and people are starting to shift production workloads into those environments. So we think the demand's actually going to be really stable. The tricky part for investors is understanding the chunkiness of the supply side of the equation, of the components coming into these public clouds. They're going to be bought in chunks. Microsoft gets better utilization on that underlying hardware and is able to sustain good demand. But from the supply side, you see really chunky sort of shipments into those public clouds. Microsoft's
trying to tell a story just kind of like ground warfare in the cloud, that it's going vertical by vertical, this Walgreens deal, Kroger deal, that it's going to be able to really set up good processes with these customers using its enterprise pedigree and gain ground in the cloud. Do you buy that?
I do. I think in our survey work and our conversation with CIOs, we see the potential for Microsoft to really catch up with AWS. AWS got the early lead when it came to developers, guys in Silicon Valley, the real hardcore engineers. But now when it comes to solving real problems, when it comes to solving mainstream business problems, Microsoft starts to get more of an advantage for two main reasons. One, they have assets that are both in the public cloud, but also in on-premise environments. So they can help.
Amazon says they've got that too now. They're shipping servers soon.
Soon. But today, on the ground, Microsoft can ship a server in there today, and they have the legacy of doing that.
But you're just saying Microsoft has already permeated the enterprise space in general.
Yes.
In ways Amazon has not yet.
Yeah. They have the technology on premise. They have people comfortable with using that technology, and importantly, they have the customer relationships. They understand how to work with someone like a Walgreens. They understand the regulatory compliance procurement processes to get these big companies up and running on the technology.
So then what does AWS need to say tonight?
So AWS needs to see the continued, on the cloud side of the equation, needs to see these continued trend lines. They need to talk about expanding out their enterprise presence, being able to do better both in on-premise environments and sort of the progress they're making with the new servers they're looking to ship on. And they also need to convince investors that they can solve the business problems as well as Microsoft can, that they can build those relationships, get that domain expertise of what's the problem that Walgreens is trying to solve, Albertsons is trying to solve, not just the technology problem that the developers and the engineers have.
So assuming Amazon doesn't whiff on AWS tonight, the read-through for Intel, Micron, et cetera, is actually pretty good because it supports their story that maybe there will be a pickup in the second half of the year on demand because the cloud players do continue to be hungry.
Yeah, definitely. Right. I think if you see this continued strong cloud demand, you're much more likely to say for these suppliers that this is more a cycle in which the cloud vendors ingest and sort of digest the technology the suppliers are shipping to them.